Prof, a very good morning to you. What are the chances that we will get this $4 billion?
Yes, indeed. It's $4.2 billion, not rand. And so, yes, that's scheduled to be approved today. The IMF has over $1 trillion to be lending out. They've beefed up their balance sheet, and there's even more potential if needed if the world financial system continues its decline. But the desperate question is, should we be borrowing in U.S. dollars, and should we be borrowing from this institution, the IMF, which has had a very dubious history here in South Africa, lending to the apartheid government, even though now the ruling party, the African National Congress, said during the exile years they shouldn't be lending, and they continued to lend in 1960 after Sharpeville, in 1976 after the Soweto students, in 1982 when the gold price collapsed, and then finally 1993 on the eve of democracy, which locked in South Africa to some difficult conditions for President Mandela to try to grapple with while under the thumb of IMF.
Yeah, and as you correctly put it, Prof, it has a dubious record, and I remember some time ago talking to the SACP, who were quite vehement that South Africa does not need this loan or does not need to borrow from the IMF or the World Bank because the country has other options. What other options are available to us?
Well, exactly. You either need to borrow from international markets to service international debt and to pay your international bills, whether they be for the trade deficit or the reimbursement of companies who need their profits and dividends paid in dollars or in euros or in yuan or harder currency. That's why you borrow internationally. In fact, South Africa isn't in a desperate situation because we've just had the first current account surplus. That means our trade has been in surplus plus. It's been so high that it even offsets the outflows. And Roy Havemann, who's the Treasury Chief Director for International Relations, actually made this point in a Goldman Sachs interview about 4 or 5 weeks ago, that South Africa is not short. There's $50 billion worth of not only cash but gold in the Reserve Bank's foreign reserves. So that's one big question. Then if you do need money to finance COVID, let's say massive increase in your public deficit, you need to give people income support, you need to pay for more healthcare workers and protective equipment, all of the things we know that need to happen. You can do that with rands. There's very little of that that's imported, and to pay back local financiers, you use rand. And for that, the Reserve Bank's already shown you can actually print money. You can go to the Reserve Bank and then go to the Treasury auction and use rands to do so. We aren't facing any inflation threats. I think we're about 2%. So this is the sort of debate. Should we be making South Africa's existing foreign debt, which is $185 billion, which is more than 50, well, in fact, it's 67% of GDP. If our GDP is about $300 billion at the moment. So we're reaching now with the African Development Bank loan last week and the BRICS New Development Bank loan, a couple of billion, and now the IMF loan, $4.2 billion. We're up to about $200 billion easily, and that's dollars, right? And that's going to be increasingly difficult for next generations to repay.
Yeah, Prof. Very briefly for me, if indeed this loan does come through, the worry always is our sovereignty. What conditions will come with this loan?
Well, it's a very good question because although the IMF says, no, we're going relaxed on conditions, we're not going to move in and take over your treasury the way many African and other poorer countries are suffering now. In other words, your capital city now is no longer the policy headquarters. There's a small cubicle at 18th Street in Washington that now runs your country. That's your concern. It's a good concern. I would say it's not that big a concern here now. We have such a strong and robust local political machinery, and letting the IMF run things would be difficult. But there are 3 guys who do run things. They tell the Treasury, these 3 brothers who state-captured Treasury, if you will, those are Standard & Poor's, Fitch, and Moody's, and they have strength because of our foreign financing requirements, and this is going to make them stronger. In other words, the sort of international financial bloc, the credit rating agencies, S&P, Fitch, and Moody's, and the IMF, they will have their power, and that is to squeeze the budget. Fiscal austerity has already been announced as Still Mboweni, our finance minister, reacts to their demands. So yes, that's a very, very good concern now and going into the future.
Dr. Brandt, thank you very much for your time, Professor at the University of the Western Cape.